Good morning, traders. Welcome back to your daily Nifty market analysis. Today is going to be an interesting session. We are coming off a positive close yesterday, but global clues are sending mixed signals this morning. So let's break down today's Nifty outlook, key resistance and support levels, and how the global markets might influence intraday movement. Coming to Nifty overview, Nifty closed around 25,170, gaining about 135 points or 0.54%. In the previous session, technically, Nifty managed to stay above the 25,100 zone, which was a short-term support, but today the tone looks slightly cautious. According to my analysis, Nifty's direction today is expected to be flat to negative, possibly around 50 to 150 points on the downside. That means we could see some initial attempts to hold higher levels, but selling pressure may build up gradually as the day progresses. Coming to global market influence, let's take a look at the global setup. US 30 is down 0.47%, showing weakness in US indexes. Asian markets are also in the red around 0.59% minus, signaling risk of sentiment. European markets are relatively flat to slightly negative at minus 0.19%. On the currency front, USD INR is marginally higher by 0.04%, indicating a flat but stable rupee. And as for crude oil, though it's up 1.22%, we will ignore that factor for today's Nifty bias. So overall, the global picture leans slightly negative, which adds to our expectation that Nifty might struggle for sustaining higher levels today. Coming to the key resistance level, now let's go through the most important technical part. The resistance zones, we have six major resistance levels. We have R1 at 25,262, R2 25,337, R3 25,422, R4 25,517, R5 25,565, R6 25,633. The immediate resistance lies around 25,262, 25,340. If Nifty opens near or above these zones, traders can expect profit booking or short build-up. About 25,420, there is a minor chance of a breakout, but that move will need strong global support, which currently seems unlikely. So intraday traders should keep a close eye on R1 and R2 zones for possible reversal setups. Now let's come to the key support levels. Here are the key support levels on today's chart. S1, which is at 25,087, S2 25,002, S3 24,917, S4 24,827, S5 24,757, S6 24,667. The 25,000 level is a psychological round number. If Nifty slips below this mark, we could see an accelerated fall toward 24,900 or even 24,800. On the upside, any bounce toward 25,250 to 25,300 might face selling pressure. Now, coming to trading plan and today's market psychology, how should traders plan their day? Opening strategy, if Nifty opens flat or slightly higher, wait for rejection near R1 or R2 before going short. If it opens with a gap down, watch for consolidation near S1 for potential intraday recovery. Coming to intraday bias, the trend remains flat to negative, so avoid aggressive long positions until the price sustains about 25,350. And the psychologically, like 25,000 is the key make or break zone today. As long as Nifty trades above that, dips might get bought, but once it breaks, bears may take control. And volatility watch, expect sideways movement in the first half, followed by a directional momentum in the second half. Coming to the sectorial and sentiment, keep an eye on IT and banking sectors. They might lead the initial moves. It could see mild weakness following US cues, while banking stocks might remain range bound. Also, monitor FII data. Recent sessions have shown mild profit booking, which could continue today. Finally, conclusion and summary. Global cues are weak. Nifty likely to trade flat to negative with 50 to 150 points downside possible. Key resistance 25,262, 25,337, 25,422. And coming to key support levels 25,087, 25,002, 24,917. So stay cautious. Trade with proper risk management and watch price action closely near the resistance and support zones. That's all for today's pre-market outlook. If you found this analysis useful, don't forget to like, subscribe, and comment below your view for today's market. Do you think Nifty will hold 25,000 or break it? See you in the post-market analysis. Thank you.